Here we go. And we live, and we live, and we live. Welcome back to another amazing Tim's Tidbit. This a Tim's Tidbit takeover. Another Tim's Tidbit takeover. But this one here, we're going to do it a little bit different. Yes, we got my personal financial advisor, Dustin Tibbitts, with Jazz Wealth Management in the managers in the building. What it do? What it do? Pull up the YouTube. Y'all know what to do. First cousin over there say we here. There you go. We here. We lit. So we gonna get into it, man. I ain't gonna hold Dustin up long. He a busy man. This the day he supposed to relax, but he still be sending out emails to all the clients because I got mine earlier today talking about our funds versus the market.
There you go.
I'm gonna give him a slight introduction, and then y'all know what I'm gonna do. I'm gonna give out my disclaimer, and then we're gonna get Dustin into it. Dustin Tibbitts, like I said, Jazz Wealth Managers. That's one of his brainchilds that came to fruition, and now they are just north of $200 million in assets under management, and about 0.000.2% of that is mine. He helped me keep my little bit of dough straight. Keep your dough straight. That's they claim to fame. Not only can they help you, you know what I'm saying, keep your IRA dough straight, they can help you keep all your dough straight these days with all that jazz. This all kind of stuff that they offer, but we ain't here to give you a sales pitch. Dustin was kind enough to pull up on the cousins, do a Tim's Tidbit takeover, and he just gonna break down a few retirement tips. He said, tips. He said, Tim, what you want to talk about? I said, I want you to break it down and just talk to the basic retiree, not just a trader, not just the investor. That's why I told y'all to share it with your Uncle Bubba that work at Walmart. I just breaking down basic retirement tips for anybody, because everybody say, "Oh, we gon' get this generational wealth." When you get the generational wealth, what you gonna do with it? You know what I'm saying? So we just gonna share a few tips. And before Dustin come to the stage, I just want y'all to know Dustin is a financial advisor. He is a fiduciary. He's mine. So we on a public platform. Don't be coming out here asking him specific questions. By the rules of the SEC, he's certified. He can only give out general information on a public platform. So don't be coming out here asking those specific questions. You feel me? All right, with that being said, I'm gonna go ahead and I got to pull my slide up just in case somebody got it on mute and they can't hear me. I got to pull my slide up while I give them a disclaimer. Is my mom in the chat? Mama, you in the chat, baby? Mama ain't in the chat, is it, Calendar? Here we go. Boop, 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 boop. Here we go. There you go. Doop, 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 doop. Okay, here we go. Y'all ready? Oh, I got to share the screen to help you share the screen, ain't it, Tim?
Act like you've done this before.
Act like I did it before. You feel me? Start acting brand new. All right, y'all, here we go. Say it with me. Say it with me. Say it with me. Y'all can say it with me. That screen, not the other screen. Y'all can say it with me at this point in time. On the count of three, we all gonna say it together. Y'all ready? 1, 2, 3. Disclaimer, disclaimer, disclaimer. I am not a financial advisor. I am not a fiduciary. Nothing I say should be taken as financial advice. Do your own research. Investing involves considerable risk, and you should always consult a financial advisor before making any investment decisions. You feel me? With that out of the way, I'm just gonna let y'all know again that Dustin Tibbitts is a financial advisor. He is my financial advisor. He is a fiduciary. He's my fiduciary. And don't be coming up here asking him no questions that he can't answer. Okay? And with that being said, oh yeah, little Timmy Rogers in here. All right, I'll pitch it over to Dustin. Dustin, I appreciate you, my brother. I appreciate you helping me and my sweetie keep our little bit of dough straight. And I appreciate you giving your time to pull up and share some retirement tips with the cousins. The floor is yours, my good sir.
I love it, sir, man. That's an introduction right there, man. You cover every little thing. Plus, you got the disclaimer down at the bottom. That's pretty clear. I learned a thing or two from you, huh? I love it, man. Well, my biggest thing, and I know you guys are focused on doing a lot of the trading and stuff. I love doing the trading. That's one of my favorite things to do. But there's got to be a little disconnect there, right? So you those of you doing the trading, you have a great time with that. It's been a lot of fun lately, right? With the market going nuts, right? There's a lot of activity there, but you got to also look at the long-term stuff. I like to tease people and say, you're going to get old at some point. We're all going to get old, and that's, we got to plan for that, because I see people every day, sadly, that they didn't save enough. They didn't know how much to save. They didn't know where to put it. They didn't know what to do with it. And so that's really my focus. I just like people to know how much to save, where to put it, and what to invest it in. And if we can cover that, then like that pretty much answers the questions, right? I mean, that's everything that you could ever want in terms of knowing that. So other advisors, they'll do their thing and be like, you want to have a flight school when you retire, you want to do a winery or something like that. What? I've never met anybody that's done that. I've never met one person that said, I'm going to save up all this money because when I retire, I'm going to have a winery in Italy or something. Most people are just the average person, man. We're just trying to save enough money, myself included, just to get to retirement and do whatever the hell it is you want to do, but have a good time with it. And so it all starts with, to me, figuring out how much you want to save. Because if you talk to any advisor, I don't put myself in that category, but you talk to other advisors, the goal is to get you to save as many dollars as possible, because that's how they make more money. And that always rubbed me the wrong way, because you might have to save $1,000 a year, and somebody else may have to save $12,000 a year because they have some bigger, loftier goal or something. But it doesn't mean you got to scrimp and save every single penny. That's just stressful. You can't go do fun things like trading and things like this. Where'd Tim go? Tim ain't here anymore?
I'm here. I just gave you the whole stage.
You're leaving me, man.
Nah, I just gave you the whole stage so people can focus.
So, so for Tim as an example, right? So we got to know how much to save for retirement so he can forget about it, right? So whatever his number is, and that's going to change over time, but he knows that that's the goal he's got to shoot for. And then everything else is, fun money, or whatever car you want to buy, or if you're trying to get a second house. Real estate's popular right now. So that's tip number one for me, is know the exact number that you got to save. Now, Tim, you know how to calculate that?
I used the tool inside the dojo.
There you go. All right. So you got a tool there, but so how does anybody know how to do that? Because you got how much you want to have in retirement, how much you going to get in Social Security, what age you want to retire, how long you think you're going to live. There's all that boring stuff that's in there. So the easiest thing I can do, I'll try to pull this up. This is free. This is public. We used to use this a long time ago, and it's excellent. I'll go to my screen here. Let's see. So I've shared a different screen there. So let me do something real quick with you. So I'm going to start this screen share. What I want to go to show you a website, and it's run by the regulators, right? So this is not like just some place that's going to sell you something. This is actually done by the regulators are called FINRA. And so we go to, you can see the link up top there, right? They got a calculator on there that makes this super, super easy. So I'll just give you an example. Who's, what age group you got in here? Anybody? Let's see. What, you know who they are, man. Tell me somebody that's, how old do you think they are? Man, you got your mic off, man. Act like you've done this before.
I'm sorry, Calendar. Yeah, the biggest demographic that watches is between 34 and 54. That's the biggest demographic, but it ranged from like the 20s up into the 70s.
Okay, so we'll do. We got Travis Scott there. Come on, is that Travis Scott?
Yes, the real Travis Scott. He's a culinary. Man. He's a culinary chef.
Shoot. All right, so we got people in here. All right, so we're gonna say Travis. We're gonna go with you. So I'm gonna put the age down here at 42 because we know Travis is 42, and you can go to the same website, put your age in there, and we'll just say 63 is where we want to retire. starting at the top, put how much you've already saved for retirement. Maybe you haven't saved a lot. You would know how much it is. How much you want to have in retirement after tax. This will be inflation adjusted, right? So you don't have to worry about that issue going on there. Annual income you want to get in retirement. This could be Social Security, right? The average Social Security payment right now is just about $18,000 a year, and that'll likely be going up next year. But let's use the average, not that much. And it will be taxed in retirement. Your Social Security is going to be taxed to some degree, whether it's a quarter, 50%, or 85%. But we got current age of Tim there is 42, right? Or Travis, sorry, 42, retire at 62. Let's do that. You could put your age in there. When do you think you're going to, what's your lifespan going to look like? Inflation's a big one right now because that thing is killer. But what we're doing here is we're saying, what's the average inflation rate you think to expect? Not right now, because you're going to be mad if you see what the numbers are. So inflation's high now, but let's just put 4.5% as an average, because unfortunately it is higher right now. Your current tax bracket, we'll pretend is 12%. It's either 12, 22, 24, or so on. But most people probably land in the 12% after their standard deductions and everything. Retirement tax rate, I always shoot high on this one. So if you don't know, right, in this case, the person wants $50,000, it's not going to be 25%. It's just not possible with only taking that much money out. But let's leave it there for the moment. And then your average return, what do you expect? This is individual to you because you may be investing really aggressively, using index funds, building your own funds, whatever you do. Somebody else may say that market scares the damn out of me. I can't deal with it. I don't like that. So you put your number in there and say, well, I don't invest aggressively. I invest, more cautiously or something, whatever you fit in there. And then you can pick a retirement account. Let's pretend you got a Roth IRA just for fun. We'll adjust the deposits for inflation, which is going to be this number here over time, right? And so then you just hit calculate. So in this case, for Travis to have 15 already, wants 50. Of the 50, 18's coming from Social Security. He's got retire at 62, 4.5% inflation, current tax rate. You see all that stuff there. He's got to save some dough, man. So he's got to save $25,200 in the next 12 months and then raise it by inflation each year, right? So that would be the 4.5%. That's a lot of money. So now what can you do? You go, Jesus, okay, that's a lot of money. So we can either adjust how much you want to have in retirement, right? You might want to include maybe your spouse's Social Security or something. I also tell people, go to ssa.gov and actually look up what your number is. You could do that, right? You go to ssa.gov, prove you are who you say you are, and they will show you exactly what they're going to pay out at various ages. So let's say now Travis looks it up, right? And he's got he's going to take Social Security at 64 for whatever reason. So maybe this number goes higher. It's not going to go much higher, but let's say it's 22,000. And he says, okay, first couple of years, I'll pull for my retirement. Then that Social Security kicks in. That's going to be great. That'll change your numbers, right? The biggest thing you could look at is your taxes and your returns. Remember, I said I'm shooting high here with this 25%. It can't be 25% at the moment. So what happens is you actually are going to have, at the end of 2025, these tax rates are going to change a little bit. The Trump tax credits will go away, and they're supposed to revert back to the way they were. So that would be 15%. So you can be tough on yourself and say 25%, but it's just not, that's not reasonable. So if the Trump tax credits go away, let's assume it's 15% is what they revert back to. That's what's supposed to happen anyways. So all of a sudden we're chipping away at this number, chipping away, trying to get it lower and lower. The point is you want to know what that number is, because once you know it, if you go, I'm cool with that. Look, I got a 401k. Maybe you work somewhere 50, 60,000 a year, whatever you're making, and you're putting 5% away. That's $2,500 plus a match, maybe another $2,500. You're trying to chip away at that number and see what's possible for you there. So that is the first big tip there. What you think, Tim? You want to see they want to see the website, I think.
Oh yeah, that's good. I like that.
Let me show you how to get there, because I don't know. It's a really long website. Go to finra.org and then slide on over here and select tools and calculators. There's other stuff there too, but this one's great. Click on tools and calculators, and then you're just going to hit calculators. It's the retirement calculator right at the top there. So maybe they'll find that. And there's no catch. I mean, you don't put any personal information in there, but boy, you could play around with some numbers in there very quickly. See, shoot, I only got to save, $8,000, whatever it is. Now the youngins in here, where the youngins? I saw some young ages in there. Hold on, watch this.
24.
24. Oh man. So look, a youngin, he probably don't have much saved. Maybe he got 5,000 saved, starting a new job or something, or this is what he's gonna save. And he says the same thing. 50,000. I'll say a little Social Security in there. I'm 24 years old, and since you're young, you probably want to retire young. Say, I'm gonna retire at 60. I'm not working all these days. So you go 4.5%. Your tax bracket's likely nothing right now because you're just getting started in life. And then we'll say the 15%. Now you're young, so you're investing more aggressively, but I'm not going to change it too much. I'm just going to say 7.5 because the stock market returns are actually over the entire history of the stock market. It's actually 9.8% before inflation. So what are we doing here? We're saying 7.5%, then take out inflation, right? What we should do is we should be saying 9.8%, then minus inflation. So you see how I'm making it tougher. You're 24, you go with the Roth IRA, of course, because you're 24, you don't want to pay taxes. Look at this. If you want to retire with the 50,000, you're at 9,992, and that's overestimating a lot. We're also underestimating how much you're going to earn on those investments. Realistically, you see what's happening. We're assuming you're only growing at 3%. That is way too low, but just to show you how you can make it hard on yourself. So look at that, $9,000. So now he knows you're 24 years old, and you know, all right, first job I get a 401k. I'll put in 6, company puts in 5 or 6 or whatever. You're pretty much done right there. So now you could put that off to the side. Quit worrying about it and looking at how much you got to save. Don't let people talk you into buying annuities and stuff. You know exactly what the number is. That's one of my favorite things to do right there, man. Big time. Now Tim can use it too and update his number.
Oh yeah, I appreciate it. And we all about having free tools. The cousins love having free tools to be able to, find these realistic numbers.
And an honest free tool that's actually made by the regulators, so you know it's right. They don't mess up anything. They get in trouble. So that'd be the first thing. Check that out. That's the easiest thing for you to do. The second thing now is, let's pretend you pick that number. You put in everything you like, and you go, all right, $9,900. That's what I choose. Right? Let's go make it a little easier. Okay, so we say he's gonna retire at 63. All right, so you got $8,000. Well, that money's got to go somewhere, and in your case, it could be different. But if we're looking to a youngin here that's 24 years old, you use the Roth IRA or the Roth 401k. So the difference there is the Roth 401k. Any account that has numbers in it, your employer will give you that one. Any account that only has letters in it, that's yours. It's up to you to create that. So either one of those would work great for someone this young because then they don't have to worry about that tax, later in life. But that gets the money in there. So we have the amount that we need to save, and now you're going to decide where it's going to go, like what accounts are going to go in. If you're a little bit older and you're making more money now, or you got a steady job, you might want to use the IRA or the 401k. But you're going to decide where those dollars go. Then so that's the second part. The third part is, what in the world do we invest the money in, right? We got the number, we got the account. Now the money's just sitting there. You got to do something with it, right? Well, and Tim, you stop me if I get a little crazy here, because sometimes I go on and on, man. But
no, get crazy if you want to.
So each account can handle investments a different way. If you want to look it up, it's called asset location. Boy, it's just a fancy way of saying what investment goes in what account. So we know the numbers, we know the dough that's going in the account, we know which account it's going into. Now that it's there, the first thing people always do is they go, I want those dividends. That's what I want. I find me some high dividend paying stocks. I don't have to worry about it. I get that money coming in every quarter, every month, whatever it is. But depending on the account that you have, that may not be the best account, because each account is taxed differently. The Roth IRA, in that case we were just talking about, there's no tax. So if you have an account where the government can't tax any of it, do you want slower dividend paying stocks, just bringing in a little money, Or do you want that money to grow as much as humanly possible because you know you don't owe tax on it? So in that case, if you have a Roth IRA, that's where the aggressive swing for the fences type investments go. Growth stocks, your index funds. If you've got like, what was it, oil for a while there when it was trading real cheap. All right, you want to bet on oil. I mean, it was cheap, but if things like that you expect a lot of growth. Bitcoin is coming up soon where you're allowed to be able to do that. You can kind of do it right now, but things that you think this is a home run, or like the S&P giving you 9.8% over the long run. All right, that's a growth position. Put that in the Roth IRA, because if you put in the $5,000, whatever you put in, we want that to turn into $5 million because the government can't touch it, right? Now, if you have a 401k at work, you might, if you're self-employed, you have a SEP IRA, you know these things if you have them. So those are taxed, meaning when you go pull the money out, you retire now at 63, 62, you pull the money out, the government says, we give us some money. You made all this money. We're going to count that as income. So we don't want those accounts to be as big as possible. I mean, we want them to grow, of course, but we'll take dividend stocks in an IRA all day long, because we get the dividend over time. It's a nice stable companies like, what was Verizon, all your real estate investment trusts. Everybody's into that right now, that pay the high dividends. Put them in there, right? We want growth in the post-tax accounts, and we want dividends, or maybe slower terms, high yielding stuff in the IRA. If you make it past that, you guys got your brokerage accounts, right? Now, if you guys are trading in them, that's fine. That's perfectly normal. You should do that. But if you say, man, I put in my 401k, I put in 3%, they match 3%. That's great. I'm done with that. I don't need to do that anymore. I went to my Roth IRA, put in a little bit of money. That's going to grow aggressively. Okay, well, that's limited. You can only put 6,000 in for the year. What now? The brokerage account, that individual account, that's the last account that you want to use for long-term or retirement type savings. And in that account, that's where you want the tax-free stuff, right? You want the things that like maybe you do municipal bonds or bond funds or things like that. If you're going to get wild, that you would use those kind of things, because there's tax advantages in a non-tax advantage account. So when you look at all over time, whoever that was 24, you're going to grow up and you're going to have old jobs, new jobs, 401ks, Roth IRAs, accounts you forgot about. Everybody does it. Think about how much goes into each account, which accounts you're going to use. And then, all right, in this account, I'm going to have my growth accounts, or my growth stocks. Over here, I'm going to have my dividend stocks. That's the best thing you can do. You do that, you're already 100% of everybody else that's out there, because they don't think about that. Nobody just teaches them. Go ahead and do it. That's what you do. So pretty simple, right? Pretty simple, straightforward.
Y'all, Lex, that's a female, by the way. Lex, the 24-year-old said, I can't fathom waiting 40 years for my money. What kind of I love everything you just said, and like I say, we ain't gonna hold you up real long, but I remember you did a video one time before, and I don't know if you'll be able to, come off the dome with it, but can you share with the cousins how you kind of broke it down on a fin tips one time, where you was talking about how to get the best tax advantage or whatever when you start pulling out of those accounts. Like if you got the Roth and the IRA, the 401, you broke down something one time on the video, talk about how to get the best tax advantage. You know what I'm saying? Because you all about squeezing the juice out the turnip, and that's what I like about you.
I love that part. So when people go to retire, that's got to be a question. You got to say, I have this account and this account, right? If you just have a 401k and a Roth, okay, you need to take out, like in our example was the 50,000. Well, you have to take out the money now. If you took it all out of one account, it might count as income. So therefore you're going to pay more tax than you should. If you take money out of some out of the Roth and some out of the 401k, we can show your income to be lower on paper. That is huge. By the way, she said, don't want to wait 40 years for your money. So that's a big one, trader. So this is a big one. This is why I like the Roth IRA. Most people don't know the rule. They think they think you got to wait 5 years, but this is not true at all. So in a Roth IRA, if you're putting dollars in, let's say you do $1,000 this year and 5 next year, you go nuts. You just start putting money away and you go, I'm 52 years old and I got this big Roth IRA and I don't want to wait until I retire. Any dollar you put in a Roth IRA, it's already been taxed, right? You got it from your paycheck and then you put it in your Roth or something. So the IRS doesn't care if you take that money out. Any of it, all of it, doesn't matter. So you could be 52 years old. What happens a lot, you get like a 24-year-old starts saving, they're all excited about their Roth. Then they get to be 27, 28, first baby comes along and they go, oh, damn, all right, this thing is expensive. And so they need to pull some money out. There's no penalty, right? Happens all the time. So as you put money in, whoever you're working with, your broker or whatever, they'll keep track of how much you put in. You can always take it out. Super common for people to retire early and take from their Roth, right? Because there's no penalty, no tax or anything. And on paper, when you go to file your tax return, how much money did you make? I didn't make any money because I only took money out of my Roth. So what I like to do, let's see if I can, we'll just do the 2022 tax brackets. We'll just pick whatever graphic we can find here just to show you. All right, so we popped this up here. Whose site is this? Forbes. All right, who can you trust more than Forbes, right? It's not very big, so I'm gonna go back a page. And we get something bigger. Well, off to the right, just type in the tax brackets, 22 tax brackets. So let's say you're married, right? The 12% tax bracket goes up to 83.5, right? So what Tim was saying a second ago is if you're going to take out money from your accounts, we're trying to keep your number under 83.5. Or if you want to be in the 10% tax bracket, we want to try to keep your number under 20,500. That's on paper, right? So if in our other example, you got $50,000 of income. Oh, let's see if it saved. Okay, it did save. So you got 50,000. 18's coming from Social Security, right? So we've got 32 left over that we got to find that money. Remember that top of that tax bracket is 20,500. If in your first year of retirement, we took out $12,000 from your Roth IRA, your total tax bracket now is $10,000. The rest of the money can come from your 401k or whatever, so that your income goes up to $20,000 as married filing jointly, but you needed more money because you got to live in retirement. You go to your Roth IRA, take out the rest. Government doesn't care. They're not going to see that. Now you're only paying 10% on your 20,000 that's on paper. Get your standard deduction. You owe zero tax, right? That's huge right there. It just takes a second to think about it too. But that's a big one.
Yeah,
it's a big one.
I love it. I love it.
Busy, man.
I
Your
love
phone's
it.
been
We,
ringing nonstop, man.
hey, that's the telemarketers. And we don't never answer that phone, but I
Jeez.
look here. I appreciate you, Dustin. I ain't gonna hold you up forever. You done dropped some serious gems for the people. You know, I hope y'all was taking notes. Dustin can go on all day long about this stuff, but like I say, man, we not gonna hold him up. He is a financial advisor. He is a fiduciary. I think he started out as a trader. I know he used to teach people how to trade, and he be doing the office trades now. He be showing me a different way of trading options. He a premium seller. I don't understand that language.
You get there.
Yeah, he gonna get me there cause it look real stress free. The way he run his portfolio is real. He don't be like us. He don't be like sweating at night like, man, I done got into these calls and you know.
That's where this came from, man. That bald spot in the back. I had to stop doing that years ago.
Hey, but before we let Dustin get out of here, does anybody have some non-specific retirement type questions? Like he can't tell you what to buy, when to buy, if you should buy it. He can't answer anything. You can't say, hey, what about Tesla? Do you think this is a good? You can't just general retirement stuff. Does anybody have any general questions? We gonna give it about the next 5 to 10 minutes if anybody got any questions, and we gonna go from there. While we waiting to see if questions popping in, y'all been asking for it. The merch shop is now open.
Ooh.
This my latest one I got. Discipline over dollars. You see the Spider Gang logo? You see the Spider Gang logo? You feel me?
Damn.
The
I gotta
merch
get you
shop.
to come up with my taglines, man. You got some good ones.
The merch shop is open. Just go to www.thenewtlr.com. www.thenewtlr.com. Everything is the new TLR. Okay. King Rail says so you can pull out a Roth, your Roth without penalties, correct?
Yeah, the catch there is it's only the dollars you put in. So remember, the limit is 6,000 this year. So if you put in 6,000 and then you go, oh crap, I couldn't put that much money away, you could take that out all day long. Now, if you're 6,000, well, the market's going down at the moment, but let's say the market finishes off real strong, and let's say your 6,000 turns into 7,000, that $1,000 gain, that's the money you can't touch, or they're gonna penalize and tax you. But your dollars going in are always available to take out. No questions asked, no penalties, taxes, fees, nothing. That is cool, man. You turn your mic off.
Okay, Draco in the building. Shout out to cousin Draco, man. Y'all know who it is. Do you suggest a person with their own business to open a SEP?
Well, so yes and no, but this depends on your business, right? Because a SEP IRA, you can put obscene amounts of money in, 25% of your income, or up to like $58,000, whatever number is less. So most people, it's 25% of their income. But the catch is, if you have employees, you have to give it to them as well. And so if you put in $5,000 or $1,000 or whatever, and you have employees that are full time, you have to put in the same amount for them. So some people don't like that, but if it's just you running your own business, you're not going to hire anybody. Absolutely. Yep.
How do you take advantage of a Roth if you can only put $6K a year?
Well, I'm not sure what take advantage means. So if you mean like you're trying to put more money in there, there's a lot of tricks to that actually, because like the last question said, can I open a SEP? Let's think about this for a moment. Let's say you really want to put a lot of money in a Roth, right? But you can't because it's only $6,000. What if you put $10,000 in a SEP IRA or 20,000 in a SEP IRA, some big number, right? Well, when you do your taxes, it's going to say how much you put in your SEP IRA. You put $10,000, right? But the government's going to volunteer to pay you back the taxes on that SEP IRA that you put in. You're allowed to say, no, thank you. I don't want that money. So you could check a box that says, I put in 10. I was supposed to get like 2 or 3 back or whatever. I don't want it, which means now all of that money you've already paid tax on, then you could just pick it up and put it in the Roth. So you could technically put 10,000, 20,000, as long as it's not over 58,000, you could technically put as much in there up to that limit as you like.
What's the penalty on a rollover IRA?
So I'm not sure what you mean. So if you mean moving the money from a 401k to an IRA, which is known as a rollover IRA, there's no penalty or tax or anything for moving that money. If you have a rollover IRA and you're saying, I need to take some money out, then if you're under the age of 59, the penalty is 10%, goes right to the government, and then you got to count that money as income. So whatever your tax rate is, it's not pretty. And now let me just say real quick, if there's a good reason you're taking that money out, you're disabled, you have medical expenses that were extreme, you're buying a house for the first time, you can do that and they'll waive the penalty.
All right. If I already have a pension I would get when I retire from I'm assuming that's fire department, FD in 5 to 10 years, is a Roth the best bet to supplement income?
To start a Roth and to put money in there, yes, absolutely. Because when you start getting that income from the fire department, assuming that's what it is, you start getting that money in there, right? Tax. So what we want to do is we want to be able to say, you got your income coming in and you pulled from a Roth, but that didn't hurt you. So absolutely.
All right. What are your thoughts on TSP versus Roth IRA? Would it be more beneficial throwing it into a Roth IRA?
So the advisor answer is yes, open a Roth IRA and let somebody take over. The honest answer is the TSP is the best account possible that you can have. And in your case, you should be asking, do I put money in the TSP or the Roth TSP? Same exact thing as a Roth IRA, but it costs you nothing. The funds are great. And in May, actually, they are going to open up the doors to thousands of funds, and they're going to be as free as humanly possible. Like, it's going to be 0.001% to buy the investments in there, which makes it better than any single other account there is.
All right, this the last one. We came to our time period. King Real gonna finish it off. How would I move money from my 401k to my Roth?
So you wouldn't want to do that. If you have a 401k, that's pre-tax money. A Roth IRA is post-tax money. So if you pick that up and you put it in the Roth, you're going to owe tax on everything in that year. So don't do that. The other part is, if you were to say, no, I still want to do that. If you're still working at your job, they probably won't let you do it. You want to ask them if you can do what's known as an in-service rollover. That's the key word. Just say in-service rollover. Can I do it or not? And usually the answer is no. But if the answer is yes, that's what it's called. That's how you do it. There's some good questions, man.
Yeah, I appreciate you, Dustin. I if anybody, if I saw somebody I had put in the chat asking if about Dustin's contact info, uh it's if you go to jazzwealth.com, you can schedule a call. And the one I'm gonna tell you the story about how I end up working with Dustin, right?
Oh,
And
yeah, let's hear this.
Mark trading with a dummy. Mark trading with a dummy. He on here. He was like, cause I was like, I said, hey, I found my financial advisor on YouTube. He said, man, you went with a guy you met on YouTube, right? And so he was just giving out free game. I'm echoing. He was just giving out free game, and I was like, let me schedule a call with this guy. So I was like, I had two conditions. I said, if he answers the phone and if he doesn't try to sell me on anything, I'm gonna go with him. And I don't know if he remember, but when he called me, we scheduled the call and he called me. I said, oh man, you halfway there. You the one who on the phone. I said, you halfway there. And so I broke down everything. I told him what me and Clarence wanted to do. I told him how much we was putting in our 401s. I told him how much money he had saved already. Pretty much told him everything that we had going on. And he was like, well, Tim, to tell you, buddy, it's nothing I can do for you. You already there. Just keep doing what you do. You know what I'm saying? I said, sign me up. I want in on this. He said, ain't really nothing I can do. You already there. Just keep. I say, sign me up. I say, I'm going to go over here and trade a little bit. Just, I'm going to send you my little bit of dough, and I'm going to start giving you some money every pay period to just, I'll sign me up. Because it's like, he just was honest with me. The honesty is what got me. He said, look, you on your way there. It ain't nothing I can do for you. He ain't say, come on over here. And at the time, he wasn't even at 200 million assets under management yet. You know what I'm saying? He was still little baby Jazz. Well, not baby Jazz, that's his daughter, but he was still little baby Jazz at the time. You know what I'm saying? So that's the story of how I met Dustin. If y'all want a good financial advisor, man, go to jazzwealth.com and schedule a call. Right now, it's a waiting list because everybody trying to get on, but they working through the waiting list. Hey, Dustin, did my mama get on the waiting list? She said she was going to get on the waiting list because y'all talked before and she already had an advisor, but her advisor left and they switched her off. And I ain't going to put my mama business out there, even though I just did. But she wanted to come over there. She wanted to come over there to Jazz. So I told her to go put her name on the list.
Well, we've officially invited everybody on the waiting list. So she's been invited.
Y'all already okay, the waiting list over. So y'all just go schedule a call. And my homie trading with a dummy, Mark. He wants you to pull up. He got a YouTube channel where he do and he interview people too.
I saw that.
Yeah. That's the one that I told you about, and you was like, yeah, tell him to reach out to me. He want, you know what I'm saying? He want to link up with you. So Let's Mark, he on the show, Mark. Y'all email him. I gave you his information, Mark. Email him again and be like, hey, this Mark from the show. Let's try to schedule something. You know, so
Yeah.
he a busy man now. Don't take your time.
That's
Hey,
everybody says I'm busy. I'm like, I'm just
hey,
doing the same thing every day.
I know I said that was the last one, but Kashaya had something real interesting I wanted to share
Sure.
real quick. Do you have international advice for Canadians? And I already said the Dustin contact info part.
International advice, meaning how a Canadian invests in the U.S. if you want to, or are you talking about like your RRSPs in Canada? In Canada, it's a little different because they don't have IRAs and Roth IRAs. It's the same thing though. They just gave it a different name. So the RRSP are your main accounts over there. It's the same concept where it's pre-tax and post-tax. You're just going to change the name of it. So we call it Roth and we call it IRA. You just call it something different, but it is more beneficial for you to invest in the TSX or the Canada stock market using your plans, because if you come into the States, not only do you have to deal with Canada, you got to deal with the IRS over here. So it would most of the time not make any sense to do it unless you're just dabbling. But for long-term, bigger accounts, doesn't make sense. Yeah,
That's Dustin's. I did spell it right? Yeah, that's Dustin's website there. Y'all go there, schedule a call. Let me see. Let me see if I can show how it look real quick. Jazzwealth.com.
I know.
Tell me that shit.
You can just always email me too. I'm cool with that. I don't. I've never been one that's like, oh, you can't have my email. You can't reach out directly to me. But
Yeah.
uh,
It's Dustin at
Dustin,
Jazz.
you could have guessed it anyways, right? Dustin at Jazzwell.
It's Dustin at jazzwealth.com.
We're not
I'm
hiding
sharing the
anywhere.
wrong screen. I'll move this over here. Move that over there. Okay.
And now we got
Exit
Eric.
screen.
So if I don't know the question, Eric can help me out too.
Oh yeah, Eric. They got Eric. This is what the site looked like right here. Um, I ain't did this in so long. What a
Ah.
I ain't did this so long. Is what the scheduler call that?
Scroll down. We made it at the
Oh,
bottom on a homepage, so it make it easy
who is
to
this
find.
young guy right here?
Ooh, he looked good. Yeah. So we just
Oh, they're showing some portfolio stuff like that right there. Hey man, this is where's the thing at?
right there.
Reach out
Yeah.
right
You
there.
just hit that there, and it'll. The Charlie got me worked out there. So if it knows who you are, it won't make you put all kinds of information there. If it doesn't know who you are, well, then of course tell me who you are, so I know how to find you. And
Okay.
happy to help.
What's the start? Oh, right there. Just go to start, and
Yep.
then you put in fill out. Oh, y'all fancy now. Yeah, man, it wasn't like this when I did it. Look at that, man.
Mm-hmm.
Shout out Charlie, man. Shout out Charlie. Oh,
Yeah.
I ain't gonna put Dustin on blast and tell y'all when we was down there, and I was like, hey, Cody, Eric, Charlie, y'all come out here, Mama Jazz, y'all come. Dustin gonna look over me and said, Charlie Colton.
Yeah. Charlie busy. Charlie's not in the picture.
Charlie Colton. Charlie Colton. Hey, Dustin, I appreciate you, man. Hey, I
Yes, sir.
appreciate everybody for pulling up. Like I say, I just want for this Tim's Tidbit takeover. We talk about investing, trading all day long, because that's the fun, that's the sexy stuff. You know what I'm saying? But we getting this money, but we need to know what to do once we get this money, and we need to know what to do to keep as much of that money as possible in our pocket and not give it back to Uncle Sugar. You see what I'm saying? So that's why I wanted Dustin to come on. I appreciate you for coming on and sharing. Spider Gang, I'm gonna punch y'all in the throat, cause when Mark came on here, it was about 300 people on here when Mark came on here, and I told y'all don't get out here and embarrass me. Y'all gonna come out here with it's just me, Dustin, and Calandra on here. Hey, y'all asked for the merch. The merch is out there. Discipline over dollars. This the latest one that I did. I got options. I buy them, I sell them. Y'all, that was the staple. That's the first one. I got options. I buy them, I sell them. You know, discipline over dollars. We got trade what you see. We got matter of fact, while we on here, let me go back to my screen again. Boop. Yep. So if y'all go on there and go to new TLR, just 9 letters.com. Press enter. See, boom, Spider Gang. This the featured stuff right here. This all the featured stuff. I don't know. See this water bottle? Y'all see this water bottle here? That water bottle got to be coming from far, far away. Because the shipping they charge on them water bottles, Charlie, if I was y'all, I wouldn't even buy that water bottle.
I see that hoodie though, man. I like that hoodie.
Oh, hoodies, boom. You go to hoodies. Like you got the I got option hoodies right there. You can go down. Oh, this I like this one here. I like this one too. I'm not a bull or a bear. I'm a beast. Hashtag Spider Gang. You feel me?
I like that one.
Got them in different colors. You like blue. You like the indigo. You like the indigo. Yeah. So that's the hoodies. We got the ladies. Oh, we got the cell phone cases for the iPhones and the Samsungs. You know what I'm saying? You got the Spider Gang. You got the Bull versus Bell. You know what I'm saying? You got the, oh, I even got the anime joint. I made this specially for my son right here. The anime, the Bull versus Bell. And then anybody that don't know, in the background right there in the background, that says you should always know both sides of the story in Japanese. That's what that says. Bull versus Bell. You should always know both sides of the story. That's like Naruto. That's like a Naruto theme. No. Goku. That's a Goku theme. Yeah. But yeah, man. Y'all asked for it and it's there. The new TLR.com. Y'all shop with your boy. Shout out to cousin Levon. I think it's either Levon or Lavana. I don't know if how to pronounce it, but the cousin Lavana pulled up on me because YouTube recommended the site to her. I put the link in some of the videos and I was going to announce it on today's show. And when I was in here putting stuff together, I got a notification saying that somebody had bought something off the site. And it said the analytics said they were sent there from YouTube. So shout out to cousin Lavana. And Lavana, since you the first one to support me, hit me in the DMs. You know what I'm saying? Hit me in the DMs. And no, I'm going to do it like this. When you get your t-shirt, post on Instagram, and which is t-shirt on, and tag the new TLR. And then I send you a discount code to get one free item on your next thing, because you're the first cousin to support me. So when you get your shirt, post on YouTube and tag me in it. And then when you tag me in it, I'll send you a discount code to get a free. Let me know what you want: a shirt, a t-shirt, a cell phone case, a hoodie, whatever, and I'll give you a discount code to get it. Appreciate you. Appreciate the love, man. And then appreciate everybody for pulling up, man. Again, thank you, Dustin. And then next week, Mother's Day, I'm chilling with my sweetie. I ain't doing nothing. On the 15th, we got another Tim's Tidbit takeover. The cousin Zay gonna come in and drop some gems from y'all. And a little birdie told me that Lil Timmy Rogers been talking to the big cousin Q, and they trying to work something out. So I don't know, the big cousin Q might pull up one day. I don't know, man. We'll see, man. I appreciate y'all, man. Till the next time, y'all know what it is. I'm gone.